a man who worked at the ECB for almost the entire duration of Trichet's presidency. Tobias Blattner left his position at the central bank's monetary policy division earlier this year. He's now a European economist at Daiwa Capital Markets, joins us now from its London offices. And so just hearing there about the impact that JeanClaude Trichet had, not just here in Europe, but the influence that he carried with key political figures abroad, just hearing about the contact that he had with U.S. Treasury Secretary Tim Geithner. This is someone who has very much been relied upon throughout the course of the financial crisis. So how's Europe going to do without him?
Well, I mean, to be frank, I think he did an amazing job, I think, because his tenure was really, really complicated. It was first the oil price shock, then obviously we had the financial crisis after Lehman, and then we had the European debt crisis. But I think we can also be rather confident that when Mario Draghi takes over tomorrow, is because Mario Draghi has been a member of the ECB's governing council now for more than 5 years. So I think he will hand over the presidency to somebody who's has a very good track record also within the ECB, and I think who knows exactly what needs to be done now at this very, very critical stage.
So what are the immediate challenges facing Draghi?
I think the most immediate challenge really is that now with the EFSF becoming more powerful and be finally able to intervene in the bond markets, the ECB will have to make the choice now whether they will continue with their market interventions or whether they will step back as they already had announced. With under President Trichet, it was in a way of they had no other choice. They had to intervene because there was no other tool available. But now the critics, obviously, if the ECB were to continue intervening in the markets, purchasing Italian and Spanish debt, the critics, in particular in Germany, will become louder because they say, well, now there is a fund. Why do you still continue to purchase? That, I think, is the most critical challenge.
It's going to be a difficult transition, isn't it, between the ECB's bond buying plan and the EFSF being able to purchase bonds on the secondary market. So will the dilemma be as clear-cut or as black and white as you describe?
I think so, because unfortunately now we have seen that the European leaders are shifting to a different approach. They are now trying to give insurance for the primary market, for new debt issuance. But unfortunately, that leaves the secondary market. This is where the ECB has so far been intervening. That leaves that completely unprotected. And the idea now is that the contributions from non-European countries, such as from China or Norway, they shall basically compensate for the tasks of the ECB. But now if you compare, obviously, the unlimited firepower of the ECB to what eventually these non-European countries can contribute, then you will see that this is just a drop in the ocean, and this is unfortunately why financial markets are reacting the way they are doing right now after the summit, very disappointed.
Draghi is also going to come under some pressure to cut rates, isn't he, after Trichet raised them. So when do you think we might see some move on this?
I think they will probably wait until December at least. This is when the ECB staff puts out a new forecast, and I think this forecast is likely to be more gloomy for the course of next year. And I think on the back of these weaker growth prospects, I think there's a good case indeed for the ECB to cut interest rates, but probably only gradually. I think there's no case for cutting interest rates by 50 basis points immediately, but I think rather do it again gradually in 2 steps.
How difficult is it going to be for Mario Draghi to balance the interests of those governments, indebted countries that need lower rates, that need the ECB to perhaps either maintain or even step up its role in the debt markets, versus Germany, which is, of course, very concerned about inflation?
Yeah, I think it will be very, very complicated. And I think the most important thing is that they will keep with a separation principle. And that means that they say, on the one side, they provide measures that are aimed at preserving financial stability. And there we have, for example, all this unlimited amount of euros and dollars that the ECB provides. And I think that is also important on the back of the debt crisis. And then on the other side, they will set the interest rates according to economic data and to inflation data. But I think with the economy weakening in the course of next year, it's going to be easier for the ECB to stay on hold or to cut interest rates, simply because inflation pressures will also disappear in the course of next year.
What are the risks of that not happening, Mr. Blattner? Because we had inflation accelerating to some 3% in the month of September, breaking the ECB's 2% limit, I think, for a 10th straight month.
That is right. I think still the chances are relatively limited, because we are going from a period in which we had now very high energy inflation rates, and these are very, very likely to decelerate in the course of next year, because also the global economy is slowing to a certain extent. And when the domestic, then we have all of the fiscal consolidation measures kicking in most of the countries in the euro area. That will be a drag on growth and both also on inflation. So I think it looks very, very likely that inflation is going to be slowly approaching the ECB's target of around 2% in the course of next year.
Mr. Blattner, many analysts and economists are saying that the ultimate solution, or something more comprehensive in terms of resolving the issues in the region, will be the ECB essentially becoming the lender of last resort. Do you think that do you think this is a direction that Mario Draghi will go in?
I don't think so, simply because we have to really see what is the ECB's job, and the EU treaties are assigning a clear mandate to the ECB, and that is preserving price stability. So one would have to change the treaty in order to allow the ECB to do these things. I think it is rather, as the ECB also keeps on saying, it is rather in the hands of politicians to solve that crisis. So I think we should do another step towards fiscal integration, eventually to issuing Eurobonds at one point in time. That is more likely to be solving the crisis on a sustainable basis, rather than now putting again the ECB in the storm of the crisis.